What are dividends? Cut to visuals of stock market charts, companies like Coca-Cola, Microsoft, and Procter & Gamble, and dollar bills stacking up. Dividends are payments made by companies to their shareholders as a reward for investing in their stock. Think of it as a thank you from the company for supporting their growth. These payments can be monthly, quarterly, or even annually, depending on the company. Example of a quarterly dividend payment from a company like Coca-Cola. Why focus on dividend investing? Transition to visuals of people enjoying their hobbies, spending time with family, and traveling. Dividend investing is a strategy designed to build passive income. By selecting reliable, dividend-paying stocks, you can create a consistent cash flow that supports your financial goals, whether that's retiring early, supplementing your income, or building wealth over time. Key benefits of dividend investing. 1. Passive income. Money coming in without active work. 2. Capital appreciation. Stock values can grow over time. 3. Compounding. Reinvested dividends lead to exponential growth. How to start dividend investing. Visual of someone researching stocks on their laptop and checking financial news. Starting your dividend journey is simple. Here's what you need to do. Choose a brokerage. Open an account with platforms like Fidelity, Vanguard, or Robinhood. Research dividend stocks. Look for companies with a strong track record of paying and increasing dividends, known as dividend aristocrats. Assess dividend yield and payout ratio. Focus on sustainable payouts, companies that don't pay out more than they earn. Diversify. Invest in multiple sectors to reduce risk. Reinvest dividends. Use tools like dividend reinvestment plans, DRIPs, to grow your portfolio faster. Setting a cash flow goal. Visual of a financial planner using a calculator and a whiteboard with the formula. To retire on dividends, calculate how much annual income you need. Then, work backward to determine the portfolio size required. Here's a simple formula. Income needed divided by dividend yield equals target portfolio size. Example. If you need $40,000 a year and the average yield is 4%, you'll need a $1 million portfolio. Risks and tips. Visual of fluctuating stock charts and someone reviewing a financial report. While dividend investing can be rewarding, it's not without risks. Companies can cut dividends during economic downturns, and stock prices can fluctuate. Tips to mitigate risks. 1. Focus on quality. Invest in companies with strong financials. 2. Diversify. Spread investments across industries and geographies. 3. Monitor regularly. Review your portfolio to ensure it's aligned with your goals. Real-life example. Visual of a case study. A 50-year-old who built a dividend portfolio over 20 years. Meet Sarah. She started investing in dividend stocks at 30, reinvesting all her dividends. By 50, she had a portfolio generating $50,000 annually, enough to retire comfortably. Her secret: consistency, patience, and reinvestment. The power of dividend growth. Visual: a time lapse of a tree growing from a seed into a towering oak, symbolizing portfolio growth. Dividend growth is the secret sauce for long-term success. Many companies don't just pay dividends, they increase them regularly. This is called dividend growth investing. Benefits of dividend growth investing. 1. Outpacing inflation. Dividend increases protect your purchasing power over time. Higher yield on cost. Your initial investment generates greater returns as dividends grow. Compounding returns. Reinvested dividends combined with growth lead to exponential portfolio expansion. Example: if a stock pays a 3% dividend and increases it by 5% annually, in 10 years, your dividend income will nearly double without adding new investments. Tools and resources for dividend investors. Visual of a smartphone displaying financial apps, such as Seeking Alpha, Yahoo Finance, and brokerage platforms. Leverage technology to simplify your dividend investing journey. Here are some must-have tools and resources. 1. Dividend trackers. Apps like Simply Safe Dividends to monitor income and payouts. 2. Research platforms. Morningstar and Seeking Alpha for stock analysis. 3. Portfolio simulators. Tools to project future income, like Portfolio Visualizer. 4. Dividend ETFs. Funds like Vanguard High Dividend Yield ETF (VYM) for diversification without individual stock selection. These tools save time and help you make informed decisions. Building a balanced portfolio. Visual of a pie chart breaking down a diversified dividend portfolio. A successful dividend portfolio combines stability and growth. Here's how to structure it. Defensive stocks. Companies in utilities, healthcare, and consumer staples provide consistent dividends, even in downturns. Growth-oriented stocks. Tech and industrial companies may offer lower initial yields but greater dividend growth potential. REITs, real estate investment trusts, high-yield options that pay at least 90% of taxable income as dividends. Dividend ETFs, for instant diversification and reduced risk.